Hi guys, I welcome you in this wonderful video. Today I want to share with you a very simple technique that I believe will improve your trading. I've observed in the day trading community that we have two types of traders. Now, I will just illustrate with you with two boxes. I'm going to draw the first box and then the second box. So we have two types of traders. The first trader, it is the trader who analyzes the currency pair. Maybe he analyzes, he makes a decision. Let's say that particular trade that he takes works, ne? He makes money, and then he will jump to the next currency pair and analyzes that currency pair, and then let's say that pair doesn't work, he will then jump to the next pair and do the exact same thing, analyze, and maybe it works or it doesn't work. So this trader, he analyzes, he takes what the market gives him, and then he jumps to the next pair, he does the same thing. And then we have this other type of traders, the traders who specialize. Maybe this trader only trades NAS 100 or whatever pair that he chooses to specialize on. Both these scenarios, they are very bad and they are very limiting. It is something that I just want to explain to you why you shouldn't do this, and I'm also going to give you a solution which I use in my day-to-day trading. So when you jump from one pair to another, you need to know that you are limiting yourself. Why? Because you don't learn anything from doing this. Now, let me make an example. Let's say you open that trade and the trade doesn't work. You open it, it becomes a loss, and then you just leave it like that. You jump to the next pair. It means that you as a trader, you didn't learn anything from that particular loss. Why? Because you didn't even pay attention to apply post analysis and see why that trade didn't work. So you don't learn anything from your losses, and you don't even develop an understanding of the instrument that you are dealing with. Same thing applies as the guy who trades only one pair or one asset. It is that he is limiting himself in a case that he will force himself to open trades which are not even ripe or which are not even matured, because he only trades one pair. So he is forced to see opportunities even if the opportunities are not there, which is something very wrong in trading. In trading, you don't have to force structures. Structures have to appear by themselves, and then you have to take advantage of them. But if you're trading only one asset, you will find yourself opening positions that you're not even supposed to open. Why? Because you have to be trading, you want to make money, so you have to be trading, and you'll find yourself trading even if you're not supposed to trade. I hope that the problem about specializing in one pair is very clear. It limits yourself, it forces you into opening trades which are not even ripe. So what should you do as a trader? What I've been practicing in the recent years is that usually at the beginning of every month, I will sit down and just screen a lot of currency pairs or a lot of assets, and then from those assets, I will pick a few that I will be focusing on in that month or in that particular period. So there are criteria that I follow when I pick that particular asset. For an example, here we can see this is Euro US. It's Euro USD. We can see here. I just want you to look at this trend. You can see it's a clear downtrend. We have the highs, we have the lows, and there isn't any conflict. Every structure is just visible. You can tell that, okay, it's a down move. You can see even the waves. You can see the highs and the lows. So everything is clear. But then I'll just open another pair. Here we can see this is gold. You can see at this particular period that we don't actually have a clear move as for now. The market looks like it is moving sideways, but if you can pay attention to this wave, it seems like it is beginning some kind of a downward move, because you can see the highs and the lows, they become lower and lower. But the more you look at the price, the more you realize that no, somehow here we are in a very important level, which might hinder the perspective that is established by these highs and lows, which are getting lower. So the conclusion is that this move is not yet clear in terms of what it is doing. So it's very hard for you as a trader to make a decision as for now. So this is some kind of a market that I classify as untradeable. It is not yet tradable at this point in time. However, if you look at the Euro USD, you can see everything is clear. You as a trader, your role is just to wait for a corrective to be complete and then look for selling opportunities. So this is a trade or this is a pair that I will select that, okay, this is one of the pairs that I will be trading in this particular period. I will just select and add it into my watch list for that particular period, and then go to the next pair and screen it as well. I want you to understand that at this point, I'm not looking for entry opportunities. I'm not looking for patterns. I'm just looking for clarity. I want to see if I understand the particular move. So you have to understand that instrument before you can even start analyzing it, because analyzing it is trying to reveal with clarity what is already there. So when you analyze, you just try to make sense of the trend that is already there. You don't try to create structures. Structures are already there. You just want to make sense of them, and you just want to make them more clear with your lines, with your tools, or with your indicators. I want this to be very, very clear. As a trader, sit down and screen your pairs, look at them all, and then see if you understand the particular move. And then if you understand the particular move, then add that pair in your watch list. Or for an example, here on TradingView, you can highlight the pairs that you want to be trading at that particular period, or that you want to remember something. So you highlight those pairs, and then your trading should be based on those pairs that you have chosen in that particular period. In my case, in that particular month, I'll be trading this asset. And then one person will ask that, okay, what happens after you open that trade and make money or make a loss? What you need to know as a trader is that when you are trading, it's not about that's why I don't usually rely on a take profit when it comes to taking my profits. Although when it comes to losses, I do rely on a stop loss. But when it comes to me taking profits, I don't rely on take profits. Why? Because they are limiting. I'll make an example with this downward move. A trader analyzes, let's say it's this trend is at these early stages. A trader analyzes this corrective. He see it's in a form of a flag, and then he observe a pattern break, and then he begins to execute a selling trade somewhere around here, execute a selling trade, and then he sets his target. Let's say he put this here, he enters there, he puts his stop loss above that high, and then let's say he put his take profit somewhere down there, maybe observing the size of that initial impulsive. He will then set his stop loss based on that size. Let me just duplicate it somewhere like that. Maybe he will set his take profits right there, thinking that, okay, the market is gonna give an impulsive wave which is almost the same size as the previous one, because that's how a trend usually behaves. And then what will happen here is that he will take his profit, the market will take him out, and then the market continues to go down. It just gives us a corrective and then continues to go down, which means you as a trader in this entire move, you just limited yourself to these few points here. You just limited yourself to this, which is very, very small. Now, when you're trading a trend, forget about the take profit. If you set your take profit, let it be far, so that maybe it will help you if you are not there. Maybe if you are not someone who stays on the chart, it will help you to just close it for you when you are not there. But if you are someone who's trading, if you are a day trader, just like all of us here, you need to make sure that you don't limit yourself. Wait for the trend to be finished. For an example, if you've entered there, as I illustrated there as a sell, it means that even at this point you are still in the market. What you will be doing is that you'll be moving your stop loss, and also you'll be adding in your short position, meaning you'll be selling even when you see another pattern which is being broken, meaning you'll add your second position here. And the good thing is that this second position no longer risk from your account, but it risk and relies from the profits that you have made from this downward move. So you will be scaling in as the market goes on, until the market kicks you out. And then when the market kicks you out, it'll kick you out maybe as some kind of a reversal. You say like, no, it seems like the market is now giving me an uptrend, and then it takes you out. Even when it takes you out, it doesn't necessarily mean that, hey, it's over with Euro USD, let's go and trade something else. No, it's not over. What it means is that now we shift our focus. We say, okay, here we had a trend breakout here, and then we received let me change the color, and then we received some kind of a low which is higher than the previous one, and also a high which is higher than the previous one. This might be good news that, hey, it seems like now the market is giving me an uptrend. So if it gives me an uptrend, what does it mean in an uptrend? It simply means that we are now looking for buying opportunities. Then it means that now as a trader, you shift your focus again, you begin to identify buying opportunities. You do whatever you do as an analyst, you begin to figure out buying opportunities, and you enter, you ride that trend until it finishes. You see that you don't just jump from one pair to another, but you try to develop a relationship with that particular pair that you are trading. Same thing applies when you are trading maybe another asset. You'll do the same thing. You'll try to understand the structure and enter and never get out until the market reverses. That way it is very, very it is a good practice for traders to always trade markets which are trending, either downtrend or an uptrend. When you are trading a range, then you need to know that you are there for a short period of time, and that's where you can rely on take profit. But if you are trading a trend, don't always rely on take profits. So the conclusion that I will make is that make sure that you don't just jump from one pair to another. Analyze a trade. Even if it doesn't work, it means that, okay, come back and reanalyze that particular pair and try to figure out where you went wrong, if maybe there's something wrong that you did. But if there isn't anything wrong that you have done, then it means that the market have shifted its structure. It's either you go with the market and just change the decisions that you're making and go with the new move, or maybe it means that, okay, just wait again until you understand what the market is doing. So this is what I can give unto you guys. Don't specialize on one pair and don't jump from one pair to another. Just be in the middle. Choose those few pairs, maybe 5 pairs that you're gonna focus on this particular month or that particular period that you choose, and then you will grow as a trader. You learn from your losses, you learn from your profits, and you will develop a relationship with the pairs or the instrument that you are investing in. So I'm just gonna keep it short and leave it here. Thank you guys for watching.